Gartley pattern was discovered in the late 1990s by Larry Pesavento. After reading H.M. Gartley's book, Profits in the Stock Market, the Gartley pattern is on page 222 of that book, originally called the Gartley 222, and later became known as the Gartley pattern. The chart below is a diagram of the Gartley pattern, showing the XABCD pattern structure without any Fibonacci ratios. So we have a X, A, B, C, D. The Gartley pattern is the foundational work that is associated with harmonic patterns. Bryce Gilmore, who was a friend of Larry, had introduced the butterfly pattern, and soon after Scott Carney had also coined the names and applied price ratios to the bat pattern, the alternate bat pattern, the shark pattern, the crab, and the deep crab patterns. The essence of all harmonic patterns is the X, A, B, C, D relationships and ratios. The concept behind the Gartley is a retracement within the larger term trend. Odds favor success when the market retraces down from an uptrend for a bullish Gartley pattern as opposed to a bullish Gartley pattern within a downtrending market. Conversely, the bearish Gartley would be ideal to short a retracement up in a downtrending market than to short an uptrending market. In an uptrending market, traders seek to buy retracement down, and in a downtrending market, traders seek to short the retracement up. In this example, we see the structure. I highlighted the 0, 1, 2, 3, 4, 5. This is what we call an Elliott 5 wave. And in an Elliott 5 wave, you tend to get that fifth wave and then an A, B, C corrective wave down. If we look at this in relation to harmonics, it's essentially the same thing. Okay? So what you're doing is, with the harmonic pattern, you're buying the retracement within an uptrending market as opposed to try to buy the bottom of a downtrending market. So same structure as you look at it on an Elliott wave, you see in the harmonic wave where you have the same coordinates. We plotted the Elliott 5 wave to highlight the proper corrective wave structure. However, looking at this in a harmonic view, we see a clear Gartley pattern structure. This increases the odds of the pattern. Buying the retracement in an uptrend and retracement is the D completion point. Most mistakes we've noticed from viewing work on websites, social media sites, and sites where individual traders post their work is not the pattern itself, it's the location of the trend. Just because the pattern is showing a perfect structure, the higher time frame pattern needs to be in a corrective mode. But many times the A point is normally the retracement of the downtrend, and the D point is just the midway between the ensuing leg to the downside, causing the pattern to fail. You see, let's just say we have a downtrending market where you're looking for that ABC up, where you get that Gartley pattern up for a short, where most traders think this is a reversal pattern, when in fact it's a corrective pattern within the structure of a trend. Now we understand it's better to buy the pullback in an uptrending market and sell the rallies in a downtrending market, and that a trend is a friend. We can proceed to look at Fibonacci structure for the Gartley pattern. When looking for a Gartley pattern, we need to see the proper structure from X to AB, B to CD, and XA to D, and we'll lay this out step by step. The first step is the impulse leg, as you see on the screen. This is an impulse leg. The market rallies. This identifies the XA structure, and the ensuing leg creates the B. The retracement leg from the X low to the A high is the B point of the structure. The chart on the screen shows the B retracement. However, the B point will retrace 618 of the XA. Hypothetically, if this was 0 and this was 10, Okay, this would be 6.18. So X, A, B, retracement from that prior leg down. The diagram shows the retracement from X to A leg to B. The next leg of the structure will also be a retracement leg. However, this will be a retracement up from the AB leg to the downside. The Fibonacci zone will be a minimum of 38% retracement. So from A high to B up 38% minimum to a maximum of 886. This plots the C point. When looking at the Gartley pattern, the next leg down, which creates the ABCD leg that completes the ABCD pattern, while the Gartley pattern is the most important. The XAB is 618, so XAB is your 618. The ABC is 38 to 88%. Then the BCD leg will have an extension from this range here, just like this, of a minimum of 1272 to a maximum of 1618. And then the XAD, which means the X low, the A high to the D has a 786 retracement. This is considered the completion point of the pattern. Now that we understand the structure of the bullish Gartley, the decompletion point is the entry point to buy. And your risk is right below the X point, or 103%. So which means that X is the low, A is the high, 100%. If it was to retrace all the way down, it would retrace 103%. That would be your risk point. So entry point and risk point. When the entry and risk points are identified, we seek to exit at targets 38%, 618%, and 100%. So let's just say you bought the market here. The market trades to this point. You can exit, or you can exit here, or you can exit here. So if you bought multiple lots, you could scale out. If you bought one lot, you can trail a stop. For instance, if the market you bought here and the market went to 38%, you could bring your risk to here. If the market went to 618, you could bring your risk to here. You see, it's up to you at that point, but if you have multiple lots, you can scale out on the way up. Okay, what we're showing is we show an example of a Gartley pattern showing the entry. We hid the time and price and symbol to show that this applies to any market, any time frame, from 1 minute chart to a weekly chart, from corn to currencies. So essentially, this is an actual chart, a price bar, showing you your entry, your Gartley structure, and your targets. We suggest to practice with a variety of charts, different time frames, symbols, and markets. Make this a fun experience that turns into a methodology you can create profits from on a consistent basis. Once you have identified the higher time frame trend, the retracement zone, and then the harmonic pattern, whether it's a Gartley, a butterfly, a crab, or just an XABC that you have found to have proper Fibonacci ratios with binding geometry, you'll be on your way to success using these patterns. My name is Christopher Terry, and thank you for watching the video on the Gartley pattern.